You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program where we break down all of the fascinating, sometimes scary, sometimes just head-scratching developments in the world of crypto on the derivative side. So we're going to talk the options, the futures, the SKEW, the volume, the volatility, the open interest, all that good stuff, some of the hot trades, get into some of the spot and what's going on out there as well. And, of course, all of the fun stuff, your questions, get the altcoin on there as well. A lot of fun stuff. You guys can join us every Monday, usually right around 2 p.m. Central. We were off last week, but we're back again this week. A lot popping off to get to. Of course, you can get it live on the old Mixlers, wherever you get our other fine programs, or, of course, after the fact on your podcast device of choice. We don't judge. Listen, enjoy. If you like what you hear, make sure you leave a comment or leave a review for folks to head on out there and continue to discover the program. We love to see all the new listeners flooding in all the time. And joining me on the program today to discuss all things in this otherwise quiet, tranquil, just happy day in the market, got our old friend, Mr. Bill ULIVIERI from CENACLE Capital Management. Mr. Bill, welcome back to the Crypto Rundown, sir.
I'm here.
There he is. It wouldn't be an appearance by Bill if the first three didn't work, sir.
So true.
So we're going to keep on rolling then into the old Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. This is the portion of the program where we break down what the heck is going on in the world of Bitcoin. Let's start, before we even get into all things Bitcoin breakdown, we'll get to that in a second. Of course, Bill, you are an actual asset manager in your real day job over there at CENACLE, so you're actually managing traditional equity and fixed income assets over there. Of course, you also spent multiple decades on the floor of the CBOE out in the OEX and other pits as a market maker, so you have had some experience with volatility and sell-offs and things like that. Before we get into the crypto, let's just start. What is your take on what we're seeing out here? We, of course, are at, I won't say unprecedented, but certainly quite near-term historic levels out there. Most of the major indices are continuing to sell off pretty hard right now. The Dow off about 7%, the S&P 6.75%, the NASDAQ off over 6%. The sell-offs have just exacerbated as the day has gone on. Of course, it kicked off the day triggering circuit breakers over there on the NYSE and kind of just trended down from there. Crude oil has been taking it on the chin as well. And, of course, our old friend volatility, ye old VIX Cash is up firm, up to about a 55 handle right now. So a lot of things are popping off. Mr. Bill, as an asset manager out there right now, let alone as an old school options market maker, what is your take on what we're seeing out there right now, sir?
Well, Mark, that's really a great question. And so, everybody that was in the trading pit had a slightly different style of trading. And so I was someone who was a long gamma trader, right? So I would sell the rallies and buy the dips back and forth, trade the pendulum back and forth. And really, this is no different here. So I would say probably back in June, July, August, September, I began alerting our clients that we had the Wilshire 5000 index was about 50 to 70% above U.S. GDP, and it's never been that high before. We stretched if it was like a Bollinger Band, it would have been so stretched where the market was with respect to GDP that I was expecting a pullback. So we had a high cash level going into the fall, into the winter. We sold some of not the last bit of equity, but we sold, another 10 or 15% of our equity, right around Christmas time. And honestly, we've been deploying it back in the market over the last 2 weeks. So we got a pullback. I'm going to be honest with you. This is more of a pullback than I expected. But again, if you're going to be trading the ranges, if you're a contrarian trader, if you're a long gamma trader, you have to be selling the short-term bond funds, raising cash and using that cash and probably putting it into the market. I mean, I know that I bought some today before the show for my clients. I bought some, last week and again the week before that, just nibbling little by little. So we used up the cash in the last 2 weeks. And then in the middle of last week, I sold our short-term bond funds and even some of the longer-dated bond funds, kept that cash until like Friday and then today. So we still have a lot of cash to deploy. This is really, as an asset manager and someone who's been looking for a pullback, I have to say that this has been really a gift. And happy anniversary, right? This is the 11th anniversary of the global crisis, the Great Recession of 2007 and 2009. So happy anniversary and all that. And like a little while ago, it was like, who needs options in volatility when we have crypto? Now it's like the other way around. Like, who needs crypto when you've got the VIX, bonds, oil, S&P 500, just crazy off the charts volatility. So it's pretty exciting times we live in.
Yeah, we certainly aren't wanting for things to discuss on the show today. So that's the question everyone's asking us. I kind of wanted to put it to you as well as both a market maker, a former market maker, and now an asset manager out there. So a lot of people were in cash last couple of weeks. It sounds like you are comfortable dipping in at these levels then, Mr. Bill.
Yeah, exactly. I sent a newsletter out today that, again, So the companies, like the oil companies, Exxon Mobil, Chevron, Murphy Oil, all these companies are worth, 13, 15, 20, 40% less than they were like 2 days ago. I mean, give me a break. We've seen this before, Mark. We saw it back in during the flash crash of 2010. We saw it in, the 07 to 09 time period. We are not strangers to this type of volatility, and it's just a matter of time. This too shall pass, and we can't be afraid to, deploy. This seems to be a liquidity crisis. Is it an economic crisis? No, this is more of a behavioral issue, right? So yes, the Federal Reserve has jumped to the, trying to save the markets by, slashing rates and providing liquidity, and part of that is that true. But again, what other kind of infectious disease have we seen over the last 20 years that didn't? I mean, look at the market sold off almost 20% high to low back in 2018, and nobody even talked about that. We don't even remember that. You check the highs from September of 18 until the day before Christmas, I think it was, or maybe the day right after Christmas. We had virtually a 20% sell-off in these indexes, and really this is no different than right now. High to low, right, peak to trough, we're probably 19.5%, 20%, and the average is 15.3%, right, going back since 1980. So all things considering, your typical asset manager, your just old school rebalancer has to be selling bonds and buying stocks here. Just like they were selling stocks and buying bonds, at the beginning of this year. Because that rally, look at those charts of Tesla and Apple and Facebook and the S&P. Ridiculous rally that we saw in the beginning of this year. So, I think we overshot the downside target substantially. And we won't know until this plays out a little bit.
Yeah, things are certainly playing out. Like I mentioned, we are seeing the circuit breakers kicking in today. Not quite unprecedented, but certainly it's been quite some time since we've seen those. And you're right, Bill, there has been some recent history. Didn't quite have the global pandemic fears behind it, but back in 2018, there were multiple aggressive sell-offs that year. Of course, everyone remembers the VIX-Mageddon around February, where everything sold off and XIV got annihilated and all the craziness happened there. But of course, towards the tail end of that year, right around October, I think it was October 11th, was the day the worm really turned, because that was the big volume day for the year and a lot of big sell-offs. And of course, we hit the nadir for the market on Christmas Eve of that year. So between that October 11th and Christmas Eve period, there was a big sell-off. And you're right, it kind of gets lost in the wash. We could continue talking historic equities and markets and volatility for quite some time, but this is indeed a crypto program. So let's move on out to the crypto. There's all sorts of fun going on the broad volatility and equity and index options front. If you want more of that, of course, check out all the various shows we have on the network. Volatility Views, go on to check out these times. Option Block just went live a little bit ago. We have the Advisor's Option talking about hedging a pandemic. We were putting that live into the live stream a little bit earlier. So a lot of good shows for you guys to sink your teeth into. Options Bootcamp will be coming back this week because the bat signal is up. You guys need us. So we're coming back this week with that one as well. So a lot of fun stuff getting out there. Unfortunately, the fun kind of ends when you start talking about crypto. You know, here's the quote-unquote uncorrelated asset class when it comes to Bitcoin, looking a little bit correlated this week. Of course, we were off last week, so on the past couple of weeks, there's been a pretty pronounced sell-off out there in broad Bitcoin. We were threatening 10,000 to the upside around the time of our last show, right around a 9,700. Right today, we're at about a 7,700. That puts us off about 1,900 handles from our last show. I'll say that again, about 1,900 handles coming into the start of the show. We're seeing Bitcoin tick up a little bit. Was at about a 77 double or so. Now it's threatening 7,800 out there. So maybe the worm turning from the near downside a little bit, but we're seeing pretty aggressive moves out there. We saw a big sell-off yesterday, actually, on Sunday, one of the biggest single-day sell-offs since late last year out there. Some folks are actually looking at that as an overall bullish, perhaps, sign. If you're a crypto bull out there and you want something to sink your teeth into, there's always a conspiracy theory floating around out there in the crypto ether, pun intended. And right now, the major one is that this big sell-off was led by some scammers out of Asia, PLUSTOKEN. It was a big Ponzi scheme, effectively, out of China, where they effectively stole about 13,000 Bitcoin. That's right, a little bit north of 100 million at these current price levels, as well as a bunch of ETH and a few other tokens out there. So folks thinking they maybe were unwinding that this week, and that was behind the big nearly 10% sell-off we saw on Sunday from about 8,900 all the way down to that 8,000 level. Again, the single biggest daily decline since September of 2019. So if you're a Bitcoin bull and you were surprised by some of the turnaround this weekend and the hard sell-off and saying, what's the deal? This is supposed to be uncorrelated. Well, then perhaps maybe there are other shoes to drop. They arrested about 6 people in that Ponzi scheme last year, but they couldn't seize. Actually, they say total here on the scam of about 180,000 net Bitcoin, 6,400,000 ETH, and 111,000 Tether, which were sent from the victims of scams. I guess they created a fake wallet effectively. So they were scamming quite a bit of Bitcoin, and they could be unwinding some of that this past weekend, which, again, we said before, Bitcoin is poised for maybe some movement when the big whales come to play, and that could have been some of the sell-offs. So, Mr. Bill, obviously we were talking broad markets, but what are your take now on what's been going on over the past couple of weeks out here in the Bitcoin space as well, and this pretty pronounced sell-off we've seen of late, Bill?
Well, I have to be honest with you. I think everybody who looks at Bitcoin as an alternative asset class, something that's outside the system, is a little bit surprised on the decline. The year to date, not looking at today's activity or, from the weekend, say, from Friday. It's, it hasn't, the year to date numbers are still pretty good, I think. But, everyone who thinks that Bitcoin is a new gold has been disappointed over the last 10 days, I would say. So, Bitcoin still has not proved itself as the alternative asset class. My Twitter feed was just blowing up with people thinking that it was going to, take off to the moon because we had the supply-demand issue that was in place with the halvening coming up in May, and we had this global crisis that was going to certainly spur more quantitative easing, more QE. We have the repo market, which was just pumping tons of liquidity into the banking system. So people were definitely poised for the launch to the moon, and in fact, the spaceship kind of blew up, and we've seen quite a decline over the last couple of days. So again, it's hard to say, Mark. I mean, is it Is it really a flight to quality? Well, certainly bonds have taken ownership of that horse race again. And you can see that in the yields that we've watched in the last couple of days. So we're still watching it. Certainly, if you are a Bitcoin enthusiast, certainly if you are someone who holds it as a alternative asset class, you don't have more than 3 to 5% of your net worth in Bitcoin. So you're still not getting annihilated here. It's just a little bit disappointing because we thought we had this figured out.
Yeah, it certainly does put a little salt in the wound of those who've been arguing for a while about Bitcoin as the digital gold, the digital flight to quality. How much of that have we seen over the past 6 months? People writing and pontificating about that at length. Is Bitcoin the new digital flight to quality? At least the past couple of weeks, not so much. Of course, it could be extenuating circumstances out there with at least yesterday's sell-off. So has this caused you, Bill, at all to change your outlook on Bitcoin in the near term for you or any of your clients? Maybe pare down some of the holdings? Are you still pretty much maybe long-term bullish on Bitcoin? Or are you kind of on the sidelines right now? Where do you stand on Bitcoin at these levels?
For me, I mean, I'm personally appreciate the technology that it is, what it embraces. I think Bitcoin is still a really interesting technology and an asset class and a cryptocurrency and a token and money and the new gold and everything that says it is. Now, it's interesting, though, that there are some platforms that you can lend your Bitcoin and receive much more than a 10-year U.S. Treasury or a 30-year U.S. Treasury. You can earn between 4.5% and 6.5% on your Bitcoin on an annual basis. Now, they pay you that back in Bitcoin, but let's not kick this baby out, to the curb yet. There's still some interesting ways that people can use Bitcoin as an alternative asset class. And certainly, like most investments, it's not the return on the investment, it's the return of the investment. So we have to be careful that, again, we don't put too much of our net worth in something as speculative as Bitcoin. But there are some interesting platforms, mostly in the fintech space, that will pay you a decent rate of return, certainly more than short-term interest rates.
I'm sorry, I was just unwinding my 100% holding in Bitcoin, sir. Let me just hit a few more sell buttons here while we're talking, and then we'll come back to the show. All right, let's move on here to see what's going on. Obviously, we'd like to break down the volume and the volatility out there on the Bitcoin options and getting a little bit of both out there today. I guess it kind of depends where you're looking. A lot of these metrics come into you courtesy of our friends over there in SKEWland, SKEW.com. Check it out if you want a great free source of Bitcoin and alternative digital asset analytics out there. Looking at the realized vol going back 30 days, it's pretty much unched. It's still around 54%. Not a lot in that frame of reference time frame has yet really budged that number, which is kind of interesting. Going back a little bit farther, let's go back a year just for fun. The realized vol of Bitcoin over the course of the past year, about 70%. So that's exhibited some actual vol over the course of the past year. So that's putting some fuel back to the argument that Bitcoin is a pretty volatile asset class after we saw periods of a little bit of quiet out there. 30-day implied, which is what the options are actually pricing in right now, of course, listeners. That's up a bit from our last show, up about 10 points. It was 56% last show. Now it's about 66%. Not surprising. We've seen a little bit of volatility out there of late. Let's head on out to the options front, see what's been lighting it up over the course of the past week. A pretty active day out there. Deribit still the leading platform for the options, and they're putting up a lot of paper out there right now, pretty much surpassing the levels we saw back on the 26th, which was a pretty active day, 150 million out there in Deribit. Remember, this is notional now. And back on the 11th was another active day of the 159 million. Seems like Deribit's poised to surpass that. They're at 156 million as of right now. So a pretty active day out there. Also saw 113 million worth of notional going up yesterday. On the 5th, last Thursday, we saw 98 million, 80 million on the 3rd. So remember, for a long time, we had that 30 million as kind of that of notional, as that barometer out there, whether it was an active day on Deribit or not. And right now, at least, they're blowing the doors off that. So, yeah, it looks like they might have the biggest day in recent memory, if not all time out here on Deribit from an options perspective. My chart here only goes back about a month and change. I'll have to dig a little bit farther to see how that ranks in the all-time annals of overall notional volume. But either way, a pretty active day out here on Deribit land. Worth noting as well, the OK exchange, OKEX, one of the newer players in the crypto and indeed the Bitcoin options front, having a pretty big day as well, about 23 million, one of their biggest days, if not their biggest day on record out there as well. So pretty active. Let's go out here to Deribit, see what the big prints were over the course of the past a week or so. Weirdly enough, one of the bigger prints out here was kind of a combo trade. Looks like they did about 700 of paper selling the June 32,000 calls. Yes, you heard me right, listeners. 32,000 strike calls. This trade went up on the 5th, so last Thursday. About 700 of these when Bitcoin was at about 9,085. So someone looking for, I guess, a little bit of yield, they got 0.005 Bitcoin as a price for that out there. So the implied vol a little over 100%. So up to you if you think that's a good sale. And I think a lot of people would be willing to dump some Bitcoin at 32,000. So the price level, strike level, you can't really argue with. Maybe the yield they got on that, quote unquote, not so much. But as we kind of alluded to on some of our other programs of late, yield in the traditional outlets a little bit harder to come by. So folks looking a little bit farther afield, maybe our friend here trying to get some of that. It wasn't all crazy upside, though. We also saw about actually another 700 lot, 350 and 350. So again, a total of 700 of the 8750 puts going up in March this week. No side attached to this one, so you don't know if they were buying or selling. This went up on the 7th of March when Bitcoin was at about 88.92, and we had prices of about 0.03 Bitcoin out here. So obviously a little bit juicier, a little bit richer on these because they are indeed in the money puts now. At the time, they were slightly out of the money puts. But still, these puts, hopefully they were buying because theirs are looking pretty decent here in retrospect out here. Some of the big trades, this big active day today on Deribit. What's trading out there today? Let's go digging a little bit. Almost 1,000 of the June 6,000 puts. So folks maybe scrambling a little bit to the downside there. That's the biggest, number one, most active strike out there on Deribit right now, followed by about 700 of the March 6,000 puts. So it's pretty much 6,000 puts across the board in June and March are leading the dance. And we also got about pretty much a tie with about 700 of the March 7,500 puts. Those are pretty near at the money right now. And then we got March 6,500 puts. You got to go all the way out to the March 9,000 calls to find the first most active calls on the list. That's only about 450. So go figure. A lot of people play into the dark side out here today. The SKEW is up quite a bit from our last show. It was minus 8% on our last show. This time it is about 5.1%. Remember, that's a little bit counterintuitive. The minus, when they use that notation over there at SKEW, it's not what you traditionally think of, maybe bid to the puts, which is what an equity normally be. Bitcoin is usually bid to the calls. So that negative is showing bid to the calls. Usually nowadays, the puts are in the lead in the charge, hence the SKEW, swinging markedly, putting the puts out here in line out there as well. Let's head on out to see the call. The put out there is about a 54% right now. It's down from calls leading the dance. Last show, 66%. So the puts have obviously made a resurgence. I don't think that's surprising anybody out there right now. Open interest kind of actually coming off a little bit over the last week or so, but up net from our last show. Deribit still the biggest outlet with about almost 700 million notional out there outstanding. Then we've got number 2 out there is actually the OK Exchange, usurping, leapfrogging Ledger X. Ledger X used to be number 2. They only have 36 million. Now OK Exchange has about 55 million in open interest out there. So interesting stuff. CME still kind of the laggard, only 10.5 million. And round out the top 5 here, we got BAKKT with about 233,000. So a little bit quiet out there across the board. If you want to see where the most options action is centered these days across the months, out there on Deribit, it's going to be the end of March contract with about 44,000 out there as well. Before I get on out to the CME options, Bill, anything maybe surprising you in those numbers out there from a overall Bitcoin options or volume or SKEW perspective, kind of taking you back to your old market maker days, Mr. Bill?
Yeah, no, I've got to be honest with you. As I said before in the beginning of this show, that there was, I didn't care that much about stocks and options and bonds and all of our traditional things that brought us here because cryptocurrency was so darn interesting. We had so much volatility. It was great conversations. There were really cool projects. And so I kind of took my mind a little bit off of, and again, when you're an asset manager, you're not a day trader. You're just looking more long-term because you're managing retirement assets, which have a much longer profile. And so now with the market being so busy, I've kind of taken a little bit of my eyes off the Bitcoin, Ethereum, although I will say that Ethereum is not profitable to mine down at these levels. So we're going to be turning off our rig soon. It's exciting to see these kind of new asset classes come into place, even though maybe they're not exactly responding the way we expected. But again, Bitcoin and all the cryptocurrencies, despite their lower market capitalization overall, there is still some, again, great projects, good liquidity in terms of managing, moving money around the world. But it's hard for me to kind of put my finger on what should be when things are acting so weird in our traditional world. Like you've seen yields in bonds, you've seen oil drop precipitously. Like what does cryptocurrency mean in a world where the reality is like falling apart, right? It's like how do you compare now? I'm not even sure where to go with this.
No, it's a good point. When it's all hitting the fan, these alternative asset classes, we were joking down at the Risk Management Conference last week that, when it all hits the fan, correlation goes to 1, and that's usually a joke, but these days not so much. As I said, crypto is selling off. A lot of the traditional safe havens. Gold was even down briefly for a little bit today, so a lot of the traditional safe havens perhaps not even playing out the way you might imagine out there. What also is not playing out the way we might imagine is the volume over there on CME, whether it's on the futures or on the options over there on the Bitcoin front, kind of light over the course of the past week. In fact, today, while Deribit's lighting it up out there with pretty much a record day, we're only seeing $182,000 worth of notional going up on CME. That's a far cry from their high back on, February 13th of close to 4 million notional. So pretty quiet over there on the options front. It's pretty much been that case. They got over 1 million late last week. It seems like that was the one day, about 1.2 million or so notional. Other than that, it's been shy of 1 million, which is kind of interesting. We're seeing a similar story out there on the Bitcoin futures. Folks have been pontificating of late whether that light volume versus high OI, because we're seeing record OI on the futures. Maybe that's a sign that folks are kind of buying and holding right now. And some people have been arguing that that's a bullish sign for Bitcoin of late. Well, if you like that sign, it's still continuing out there. We're seeing pretty light volume. We're right around 10,000 on the tape today. That's probably one of the more active days we've seen of late. Last Thursday and Friday, we saw 2 days of both right around exactly 4,000 contracts in the futures. The rest of the days were substantially less, around 1,000, if not a little more, a little less. So pretty light days, pretty much out the entirety of last week. Today kind of being a bit of the outlier. And even today, normally we'd see probably 20-odd thousand on a day like today, and only about 10,000 so far. So things are pretty light on both halves of the CME Bitcoin contracts out there. BAKKT suffering similarly low levels out there. Our old friend, the BAKKT volume bot, treating out total volume out here for the BAKKT monthly futures. This was as of yesterday, pretty much about a day ago, was about 52 million, and the max open interest is at about almost 9.5 million out there. And today, so far, they had done about 676 Bitcoin, which is about 5.25 million notionals. Again, that's a 1-to-1 contract. So 676 Bitcoin is 676 contracts. So not a lot lighting it up out there as well. But where things are lighting it up, let's keep on rolling out into the crazy half of the crypto space as we head on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, a portion of the show where we break down what's going on outside of Bitcoin. Except right now, when we talk about the top 10, there has been some moving and shaking, mostly to the downside in the top 10 here. Let's break it down really quickly. Number one, still Bitcoin, of course, but a wee bit less than it was at the time of our last show. The market cap at around 141 billion out there. And then we got number two, ETH, down to about 21.3 billion. Again, take these overall market cap numbers with a huge grain of salt, but I think the rankings should still be fairly reliable. Number three, XRP, also taking a drubbing here over the past few weeks here, down to about 8.8 billion. Number four, Bitcoin Cash, about 4.7. Number five, Tether at about 4.6. Then we fall off quite a bit. We got Bitcoin SV 3.5, Litecoin number 7, 3 billion. Number 8, EOS at about 2.7. Number 9, Binance Coin 2.4, and then Tezos round out the top 10 at about 1.6. Some folks pointing out that's the only name in the top 10 that's been up over the course of the past week or 10 days or so. So maybe bucking the trend out there. Let's get on out some of the big altcoin out there. Obviously, it's been a rough week for ETH as well. As of our last show, which was 2 weeks ago, it's down approximately 71 handles from where it was this time last week. It's actually rallied a little bit since the start of our show. It was at about a 193 and change. Now it's at about a 197. So it's come back a little bit. So that puts it up down about only 67 or so handles. A paltry, a meager 67 handles. Still a rough week to 2 weeks or so out there on the ETH front. Let's head on out back to SKEW to see what's going on the overall analytics out there. The realized 30-day realized is up to nearly 100% from 87%. So it was always pretty frothy, but ticking up there more. A 30-day implied, ironically, again, maybe partly because of options volume compared to Bitcoin is a little bit lighter, is still unched around an 84%. So a little bit fewer data points maybe to work with there. The ADV is still pretty strong. It was up about 5 million from our last show. It's a little around 5 million or so right now. Today we're seeing about 4 million notional worth of on the tape right now, which is pretty active. Yesterday about 5.6 million, but that's still, it's not really following in the footsteps of Bitcoin, which is lighting it up. And maybe that's a little bit of an argument that the sell-off in Bitcoin is a little bit artificial. Maybe that gives some credence to the folks who say this is Ponzi scheme driven out here, because Bitcoin, excuse me, ETH options are not really lighting it up the way they were back in early February. On the 12th and 13th, we saw 15 million and 13 million worth of notional respectively going up. Yesterday and today, we saw 5.6 million yesterday and 4 million so far on the tape today. So much lighter volume out there in ETH options than we saw a few weeks back, which may be indicative that something else is afoot out there. In Bitcoin land, the SKEW is up to about minus 1.8. It was about minus 5% last week, so the calls clearly not firmly in charge. Puts starting to lead the dance. The OI also down quite a bit in ETH land right now, down to about 43 million from 63 million this time last show. The big prints out here this week were 500 lots of the March 180 puts. So these are slightly out of the money puts here, and with about 518 of those, paper selling those, as well as the March 250 calls. Those going up 550 times. Paper also selling those. Not the same day, though, listeners. It wasn't like the paper was legging into a juicy strangle out there or anything like that. But those are some of the big prints. Also saw a 500 lot even of the March 280 calls going up. Don't have a side on that one. Going up on the 5th last week. So a couple of big 500 lots, but overall, not a ton of paper out there over the course of the past few weeks. Ripple just taking it on the chin over the course of the past few weeks since our last show. We were talking recently, not too long ago, is it going to break 30 again to the upside? How's it looking? Maybe we're seeing a bit of a resurgence. This week, not so much. It's threatening the 20-cent level now to the downside, down about 7 cents from where it was this time last week. Let me check here really quickly to see if we did. Yeah, we did. You did break it ever so briefly. Looks like this morning actually got to about 19.9 out there. So it did break the 20-cent level, a level up. A lot of people have been watching and didn't think it would retest anytime soon. Did break it, but it rallied back off of that again this morning. So maybe, at least for now, that support level seems like it's holding out there. I'll have to get to the crypto patterns guys, see what they think about that. But still, interesting stuff out there. In Ripple, Bitcoin Cash, it's getting annihilated since our last show as well, down 112 points from where it was this time last show. That puts it at about 259, almost 260. So yeah, a big drubbing out there. And then Bitcoin SV rounding out some of our top 5 out here, down to about 189.5. That puts it down about 86 handles from this time last show. Bill, whenever you're on, you always maybe this week notwithstanding, because you got other fish to fry maybe, but usually you got some interesting altcoin in your back pocket that you've been watching or paying attention to. You've recommended, gaming tokens and other interesting things to us in the past. Is this a week where you've just been too focused on the primary day job, sir, to pay attention to what's going on in altcoin, or are there a few maybe percolating around in your back pocket still there these days?
Funny you mentioned that, Mark. No, I do have one for you. Now, mind you, again, I have to put on my investment advisor hat and say this is not a recommendation. All right, it's any past performance is no indication of future returns, and these are speculative assets, and you can lose 100% of your money. But one thing I will say is interesting is there is a token that I just met. Okay, so I'm kind of doing my research now. It seems interesting. Full disclaimer: I do own a little bit in a wallet just to test. But the token the company's TERNIO, 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 and the coin is TERN, TERN. And it's basically a combination of its own network protocol that works on the Stellar network and IBM's Hyperledger Fabric. So they combine the two together to create it's a money payment platform that's supposed to compete with PayPal. Now, TERNIO originally was going to be going after the digital marketing space, where they were going to provide certainty that people that were clicking on online advertisements and marketing were in fact really people. It was moms and kids who were looking at companies that were providing, consumables like, laundry detergent and diapers and things like that. But then they found out that it was robots that were automatically kind of doing the clicking at these huge farms in Russia and China. So large companies, Fortune 500 companies, international companies, were reluctant to spend money on digital marketing because they weren't sure that it was really reaching their target audience. So TERNIO originally was going to jump into that space and provide, again, use a blockchain solution to authenticate and guarantee that the people who were clicking on the link were actually people and not robots. Well, since that business kind of has slowed down a little bit, we saw this crypto winter, so to speak. TERNIO kind of pivoted right where they had found a little bit of traction and some interest, and that's in the digital payment place. So they have a card. It looks like a black American Express card. It's called the Block Card. And you can, put your cryptocurrency on the card and, swipe it and use it for payment services, just like you would a loyalty card or a gift card. So I'm kind of looking into that. I just find it interesting. So it has introduced me to a new blockchain protocol, the Stellar Lumens network, and it's introduced me to a new cryptocurrency called TERNIO. And again, I don't know the actors behind it. I'm not going to say it's a viable product yet or project, but it does seem interesting, and I'm looking at it. And again, for me, I'm one of those type of people that I don't learn academically. I learn by doing. So I have to buy a little bit. I've got to kind of keep it in my wallet, see how it works. Check the crowd and the people who are actually participating in, the Telegram channels and the Discord channels, and make sure that they don't seem like they're over promoting or it's a bunch of hype, right? So it does seem interesting, and I'm looking forward to seeing how the Block Card begins to develop and gain acceptance.
I like that. A cryptocurrency you just met. I like your terminology for that, sir.
Yes.
I like that. Let's see what kind of listener questions we might meet here on the show. You never know as we head on into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Question segment, the portion of the show where we surprise, answer your questions. Everyone's got questions these days about crypto, about life, about all sorts of fun stuff. Should we put our heads under the pillows and just stay under there as long as we can? Should we wrap our house in bubble tape? What should we do? All sorts of craziness. Let's see if we can answer at least a few of them. Start off with Taylor. Taylor wants to know, what's up with this sell-off? I thought Bitcoin wasn't correlated. Yeah, you and a lot of people. We were talking about that earlier on the show, Taylor, so hopefully you tuned in and listened to the earlier part, because that was kind of the narrative from a lot of folks out there of late, that Bitcoin isn't really, a lot of people thought maybe initially it might be inversely correlated like a gold or others. It turns out the argument was that it's really not correlated, kind of moves to the beat of its own drummer. These days, that could still be the case in the long term. Right now, though, it's moving pretty much neck and neck with the equity markets, which is not what folks out there who are turning for an uncorrelated asset, what they're looking for. Whether it's the fault of these Ponzi schemers unloading a bunch of crypto and really driving prices down over the course of the past weekend, whether there's other underpinnings afoot. Obviously, large swaths of the planet right now are kind of off limits from having able to access this stuff. And so there's issues there from a demand and a supply and everything else. Bill was just mentioning at these price levels, of course, it's not really enticing to mine. Certainly ETH, Bitcoin's not quite there yet, but ETH and some of the other altcoins could be having issues in terms of mining as a result. So there's a lot of things to bake into this sell-off. Again, I want to talk to the technical folks out there as well to see what they think about these levels. But yeah, so far, Taylor, at least here in the near term, it does seem like this is kind of putting a bit of a lie to the old argument that Bitcoin is a digital gold, which, again, that's not uncorrelated. That would be inversely correlated, which we're certainly not seeing. And then, of course, the fact that it's just not correlated in general. Bill, you kind of mentioned this earlier in the show. You said you were kind of disappointed of the performance of Bitcoin of late. What do you have to say to our friend Taylor, who maybe sounds like he was buying what everyone was selling, that Bitcoin was this completely its own asset class, sir? Clearly not the case, at least not right now.
Well, again, Bitcoin was introduced in 2009 at the height of the panic of the Great Recession, right? And so it's only really seen an up market. I mean, let's be honest. It started at virtually worth nothing, and then it got to be $20,000 a token. Now it's back down into 7,800 level. But it's never really known about a bear market because that's when it was introduced. So this is an interesting way of seeing how it's going to grow up, because it's no longer a newborn, and I wouldn't even say it's a toddler. I would say it's probably a preteen, and we have to kind of see how it's going to react. The story's not over yet. I mean, I think Bitcoin is going to be here for another, for generations. And we have the halvening coming up in May of 2020. So again, sometimes it acts like the new gold. It certainly possesses all the attributes of gold, but it's not really acting the way we expected again. And as you said, Mark, when the what hits the fan, all things correlate, to one. And so that's probably what we're seeing here, is that this deflationary expectations and pressures, people got to pay their bills, right? And I know that cryptocurrency Bitcoin miners are going to have to get a little bit more for their tokens if their energy costs stay the same. Now, this is interesting, with energy prices getting crushed and crude oil getting crushed, and even a utility company in New York. I'm going to have to go back and see if I can dig up that news article, but there was a utility company in New York was using Bitcoin mining to make around $50,000 a day in Bitcoin. That sounds a little bit high to me, but it is possible. So again, we're seeing utility companies who are suffering with low rates, who don't want to pay people who are off the grid the little bit that they put back into the system using solar panels. They're looking to monetize their excess capacity. So again, I don't think Bitcoin has lost its flavor for a new use case, but let's just give it a little bit of room to work.
I think that's a good point about the frame of reference out there, because you're right, we don't have a century's worth of data to compare with, so we're drawing a lot of conclusions from not that extensive of a data set. And you're right, this is, if this persists, we're past correction, getting into bear market territory at this point. This is really, you're right, one of the first major, we had that more protracted sell-off over the course of 2018. That took a while for that to unfold. It didn't all happen overnight like we're kind of seeing right now. Certainly from peak to trough, this has been one of the fastest, if not the fastest, turnarounds in S&P and Dow and every other major index history. We're just at all-time highs a few weeks ago, which sounds crazy to say out loud, but that's where we found ourselves, and that's where we find ourselves now. So these are somewhat unprecedented waters, so maybe it's a little hard to draw too much. That's why I say in the near term I talk about correlation numbers, because over time these things might change a little bit. But you're right, Taylor, you're not the only one who was a little bit surprised by this recent performance. We kind of outlined some of the reasons maybe behind that, maybe some of the reasons maybe you shouldn't draw too many correlations from that. I think the point about energy is an interesting one as well, because obviously that's a huge driver for the miners out there as their primary cost. If we're seeing this price war with OPEC driving down energy costs for everybody, that could maybe change the equation a little bit out there from a Bitcoin perspective. Bitcoin more correlated to energy prices than a lot of other asset classes out there. So interesting bear market in the equities, huge annihilation in energy prices. These are somewhat uncharted waters, and how Bitcoin fares going forward is going to be, I think, an interesting thing to watch. Again, keep tuning into the Crypto Rundown every week. We'll try to keep you abreast of it, bring some great guests on to help parse all that fun stuff. All right, next up, we've got the creatively named LL556. Maybe he's a clone trooper out there from Star Wars or something. He wants to know, what do you think of the CME Bitcoin volume so far? I was just talking about that earlier in the show as well, Mr. or Mrs. LL. I think to call it anemic over the past week or two is pretty spot on. Today, obviously notwithstanding decent paper out there today, but it's been surprisingly light. We went from a period leading up to the launch of the options where, north of 20,000 many days out there, 13, 15,000 easily out there on the futures. A lot of people thought that really, really boded well for the options. Turns out the options, not so much, kind of been pretty light. And now the futures have kind of shifted to a period of kind of light volume as well, which is a little bit surprising. Again, we talked about some people may be arguing this is kind of the buy and hold phase. It's a hold phase right now. Folks aren't. The OI is still high, just the volume is low, so folks are holding on to what they have. Certainly could be some argument for that out there, but I'm still a little surprised, Mr. and Mrs. LL. I was looking for maybe a little bit more action. Certainly a day like today, this is usually when options tend to spike. Look at what's going on volume-wise out there on Deribit. You think folks would have an argument to do some hedging and other things out there on a day like today, and we're not seeing that right now. So interesting things afoot. Again, we're watching those products with a lot of interest and looking for more volume out there, and if we see more, we'll let you know. We'll wrap it up with this. This is our our longtime listener, Mr. J3 Dingle, chiming in with a bit of a silly one. He says, have you considered renaming the show The Crypto Drawdown? Yeah, this week at least, Mr. Dingle, I think you're onto something. Maybe that might be something we'll have to consider for a future episode of the still currently called The Crypto Rundown. All right, unfortunately, J3 and everybody else out there, that's going to bring to a close this interesting episode of, yes, not the Crypto Drawdown, the Crypto Rundown. But before we go, Mr. Bill, if folks are intrigued, I mean, again, there aren't a lot of asset managers kind of bringing what you're bringing to the table. Obviously, the experience on the options and volatility front as a market maker, now as an asset manager, and now also dipping your toes into the crypto space. Not a lot of asset managers bringing that trifecta to the table. So if they're intrigued, maybe they want to pick your brain about crypto or the broad markets or hedging or any of these things, where should they go? What should they do, sir?
Well, thank you, Mark. Well, they can call our office at area code 847-686-4800. That's 847-686-4800. Or they can, find our website at CENACLEcapital.com and just reach out to us through the Contact Us form handler. And we'd be happy to have a conversation with anybody in this space because we do find it incredibly interesting.
It is interesting, and it's becoming more viable as new products come online for advisors like you, Bill, and others out there, and certainly other clients, to be able to dip their toes in these waters. So if you're intrigued at these lower price levels, maybe want to hit up Bill. Maybe you're just concerned about the broad market. You want someone to hold your hand in these crazy sell-offs. Maybe manage some of your assets. Hit up Mr. Bill and his team over there. CENACLE Capital, CENACLE is the place to go out there. Listeners, give me a little follow on the old Twitters as well. It's at CENACLE Capital. No spaces, no underscores, nothing like that. Just at CENACLE Capital over there on Twitter. And on behalf of Mr. Bill and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Give a title for the episode, The Crypto Drawdown. I kind of like that. So maybe if we don't rename the whole show, we'll at least call this episode The Crypto Drawdown. So there you go. You'll feel better about that, Mr. Dingle. And we'll see you guys back here next week for more of The Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.